is liquidity, and liquidity is controlled by one institution, the Federal Reserve. 8 times a year, the Federal Reserve holds a meeting called the FOMC, the Federal Open Market Committee. At these meetings, the Fed sets the federal funds rate, also known as the FFR. The federal funds rate is an annual percentage interest rate. It represents the price of short-term U.S. dollars inside the banking system. This single number controls how expensive or cheap money is for banks, for investors, and for global markets. When the federal funds rate is high, money becomes expensive. Liquidity tightens. Cash and bonds become attractive. Risk assets, including crypto, usually struggle. When the federal funds rate is low, money becomes cheap. Liquidity expands. Investors take more risk, and crypto finally gets room to breathe. But here is the most important rule. Crypto does not move on the decision itself. Crypto moves on expectations versus reality. Let's look at history. In March 2020, the Federal Reserve cut interest rates to nearly 0%. Liquidity exploded. That decision laid the foundation for the biggest crypto bull market in history. In May 2022, the Fed raised rates to fight inflation. Bitcoin initially dropped, then rallied more than 5% in a single day. Why? Because the market feared something worse, and the decision turned out to be less hawkish than expected. In September 2024, the Fed cut rates by 50 basis points. That's 0.50%. Bitcoin gained more than 4% the next day. Liquidity expectations improved. Risk appetite returned. But in December 2025, something different happened. The Fed cut rates again by 25 basis points to a target range of 3.50% to 3.75% per year. Yet, Bitcoin still fell by about 2.5%. Why? Because the cut was already priced in, and investors were more concerned about risk sentiment and future guidance. This leads to the core truth. A dovish surprise creates rallies. A hawkish surprise creates sell-offs. A fully expected decision creates volatility, but no trend. That's why professional traders don't just watch the rate cut or hike. They analyze the wording of the FOMC statement, the future rate projections in the dot plot, the Federal Reserve's balance sheet, and the tone of the Fed chair during the press conference. Long-term investors go even further. They focus on liquidity cycles, not single meetings. So remember this. The Federal Reserve sets the price of money. Liquidity sets the direction of crypto. And Bitcoin always listens, even when the crowd doesn't. If you want real macro-driven crypto analysis, not noise, not hype, but logic, subscribe.